Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Good morning. It's Wednesday, January 14th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So I'll be unavailable this afternoon. I'm flying back to Chicago. We've got our company holiday party. Should be a blast on Friday night. If you need any assistance here, reach out to the trade desk. They're always available. So overnight, the CME, they did revise the margin calculations for precious metals, resulting in a significant increase across the board. I was a little bit shocked when I saw it, but the way they're calculating it now is based on notional value rather than some of their volatility models here. So they're looking at where the price of gold, silver is at, and then they're coming up with a calculation that traders should maintain a certain percentage of that notional value. So although silver has not felt much of an impact here yet, gold and copper, they're still continuing to soar. Crypto assets are starting to break out of their trading range here. Nice move in the cryptocurrencies overnight. You do have stock futures slipping with traders. They've got a little bit of nerves here, getting poked here as far as Trump-Powell drama, some geopolitics, less than a rosy start to the earnings. We see Meta selling off overnight. We also see JP Morgan getting it really hit hard here yesterday. So you look at the precious metals markets here overnight, you do have them pulling. They pulled back from the all-time highs, but now they're ramping right back up there. So you got silver 91.37, up $3.82. That's going to be your all-time high there. You got that gold market sitting up at 46.47.5, so about $10 off its all-time high. Silver is about $1 off its all-time high, about 4% move higher here. You got copper futures really anchored right around the $6 range here. We've seen a little bit of a breakdown, but we see traders coming into that market. Same thing with the platinum market, up about $41 overnight, sitting at $23.95. That's up about 1.75%. So average range on the gold market, 14 days, sitting at $90.70. Key level of support, 43.18. You go to the silver market, 14-day average true range, $4.96. Remember, they made an announcement about a 100-ounce silver contract. I'm coordinating with the CME on that one. February 9th is when that goes into effect, and I believe that particular contract will give traders the ability to scale in a little bit more with some of this rising volatility. So we'll see where prices are at, because that's still about 2 weeks out before that particular product launches. The key level of support on the silver market sitting at $77.18. So that support level keeps rising along with the prices. Now you look at the precious metals ETF flows. Well, they're buying gold, silver, and platinum. They're selling palladium. They're buying gold, silver, and palladium. They're selling the platinum. So the exchange traded funds, they added about 186,000 ounces of gold in the overnight session. If you look at gold held by ETFs, it's up about 0.4%, sitting at 99.4 million ounces. Highest level since September 8th of 2022. Gold is up about 6% this year. It tacked on about 0.2% yesterday. And we're up just under about 1% here today. So some nice moves in the gold market. Silver rising as far as ETF flows, 0.1%. But if you look at year to date, they are still in the negative territory, down about 0.9%. So the exchange traded funds, they added about 455,000 troy ounces of silver in the previous holdings. Third straight day of growth. You look at platinum, it has decreased by about 4,500 troy ounces. That's for the fifth straight day that platinum holdings have decreased. You look at palladium holdings, they've increased for an 8th straight day. The gold-silver ratio sits at about 51-1. And you look at the macro markets, the equities overnight, really a bit softer here. You look at earnings, we're going to have Bank of America, Wells Fargo, Citigroup, among those that are expected to report here before the open. Some of the sectors in focus, if you look at the Mag 7 here, they're really under some pressure here with Meta leading the charge lower in the pre-market here, weighing in on stock futures. So mega cap stocks, they are edging down with a bit of risk-off sentiment here. A lot of geopolitical news coming out throughout the globe. So we'll see what happens. And you can see that in the crude oil market here, which is breaking out to the upside as well, really capturing, going from a bearish to a neutral to now looking like it might be a bullish trend here on the crude oil market. We'll see if it has any impact on things like inflation down the road and other markets as well. So China, their trade surplus, it climbed about $1.2 trillion in 2025, extending a record run. The tariff war really sent the exporters in search of markets beyond the U.S., and that's why Chinese economy here becoming a bit more diversified and really focusing away from the U.S. here, looking at South America, Europe, things like that. You look at the interest rate cuts. those expectations, even though we had that softer CPI print here, they are, as far as January, it's like January is all but forgotten here. There's only about a 2% chance of a likelihood that the Fed will cut rates in January. Where you go to the March meeting, it's starting to rise. So it looks like what's going to happen is Fed cuts rates, multiple meetings, takes a pause here, and then we start to get another cut here in March. Now you look at the dollar, edging higher here. It is unchanged on the overnight session, but kind of teetering on a potential breakout as well. 98.86. Euro currency 116.83, coming down to about a support level. 10-year treasury yields really range bound between that 4.11 and 4.22%, sitting at about 4.16. Key level resistance on the March 10-year note sitting right around 113. Futures have really been contained recently. We've seen that yield curve steepening. We've seen interest rate volatility come down a bit. Also, volatility in the currency markets has come down a bit. And if you look at the VIX futures, jumping up here, sitting at about 1720. So it's edging up here as I'm doing this recording. And you do have a lot of things here. You got, the geopolitics, you got the weaker equities, but it's still below that 20 line here. 20 is where things start to get dicey in the stock market. You start getting some whipsaw action here. And as the probable range in the VIX gets over that 20 level, while the lower end of it stays below it, that's where you get like people's hair on fire for about 5 minutes in the market, and then things calm down and the dip buyers come in because the VIX had come back down below that line. Now, if you look at the short positioning on the VIX, it's the most extreme in over 15 years. So it's quite incredible here how they've been beating down the VIX quite a bit. Now, you look at Bitcoin futures on January, gapped higher, went from that 4 p.m. to 5 p.m. open here for the CME's product here, and it gapped up to 95,700, triggering that bullish trend here. So the key level of support now is about $86,270. You look at the S&P Gamma exposure, it is positive, and you look at Europe and Asia, well, the European stocks, they extended that January rally, and you got Asian stocks extending its gains from record highs here, really led by Japanese shares with the MSCI Asia Pacific Index rising about 0.8%, looking for 3 straight sessions of gains. So I'll be unavailable in the afternoon here because of the fact that I'm flying. Probably from like 1 to about 3:15, I'd say 3:30, because I'm going a little bit farther to O'Hare. So we'll see how that's going there as far as that airport, because I usually don't take it. And one thing I won't be doing is taking that blue line, what our company's named after, back, because it's getting a little bit dicey there at the moment. But keep an eye on some things, see if there's any kind of weakness in the metals markets because of the rising margin requirements here. It went into effect last night, so what you'll end up seeing is that those margin clerks will be sharpening up their pencils here as this day gets underway. We'll see if the U.S. equity markets, one thing to note is that Friday they got an option expiration. Got like over $2 trillion in notional option open interest here tied to the SPX is set to roll off here. So that means that some volatility could come in the market. And also you had some of the flows have been changing a little bit. The systematic flows are really going more neutral here. And you look at these markets here, they are a bit overextended, but they can remain overextended forever. It's just once you get over that 7,000 mark, anticipate some profit taking, or some traders will be lightening up on their positions here coming into that big expiration here. So you guys got any questions, shoot a call. You want to open up an account with us. Tons of people opening up accounts, especially I anticipate another surge in account opening once they get that 100-ounce bar rocking and rolling. And one thing about the 100-ounce bar is it enables hedgers to really come out and really narrow in their hedging, because a lot of people sell off silver out to some kind of like coin deal or bullion deal or things like that. And what they do is they use that 1,000-ounce contract to hedge their position until they can offload it. But what will end up happening is someone will come in and they'll sell like 800 ounces, and the hedging leaves them some open-ended exposure with 200 ounces on the short side. So this will allow them to get a little bit more dialed in as far as their hedges are concerned. So if you guys got any questions, reach out. Send an email to info@bluelinefutures.com. Remember, futures and option trading, it does involve risk of loss, may not be suitable to all investors. Good luck, good trading.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.